All right, welcome back to Asset Coach and Tax Strategist. If you're not a subscriber already, please feel free to hit the little bell and subscribe. And if you are a subscriber, welcome back. You're going to notice a few things on our YouTube channel. There's quite a few videos that have been removed, and we've had to do this for some other content issues with our podcast and some other issues that have arisen. And so we've had to take a handful of our videos and episodes off of YouTube. So if you're looking, you're going, wow, these guys haven't done anything for 8 months. Well, that is why. We've done a ton of stuff. It just, unfortunately, we've had to take some steps to streamline some of our other platforms as well. But so today, what I want to do is I want to talk about taxes, right? So we kind of crawled out of tax season. If you talk to still a lot of tax preparers, if you're a business owner, which is why you're watching this channel, you probably filed an extension. If you're in places like California where an extension was automatically filed, or your other parts of the country where you're filing an extension, you're going through this finalization of what do I do? Well, without fail, every time we talk to people at certain periods of the year, you start talking about tax planning, you start talking about taxes and tax season. And anytime that three-letter word tax comes up, one of the things that always inevitably comes up in that conversation is an audit, that fear of an audit. And so this episode today, I thought would be appropriate, just kind of talking about what are some flags, red flag triggers that could affect us, and what are the real numbers from the IRS of the amount of audits they do. Okay, and so we'll kind of translate some of the dialogue. Now, one of the things I need you to be very, very clear and understand. Okay, anytime you see triggers for a red flag for audits or anything like that, remember the IRS audits individual tax returns. If you hear they're auditing a corporation, many times that's a C Corp. Okay, it's because it has its own tax rate. Every other entity structure is a pass-through to you, the individual owner or owners or partners of that business and entity. So when we're talking about these numbers, when we're talking about triggers, we're talking about individual taxpayers. And really, when you go and look at most of the articles or most of the information that's communicated, the IRS communicates about individual taxpayers anyways. Not till recently, in the last 5 to 6 years or so, have we started hearing, especially with this current administration, we're going to go tax business entities and complicated businesses. And these are things that Janet Yellen and this administration keep talking about, but they don't define what a complicated business is. That makes no sense. There's no such thing as a complicated business. It's very simple. It's a business, it's a C Corp, it's an S Corp, it's an LLC, it's a partnership, and it does products and services as an offering of its business. Now, if you're talking about a person who owns multiple businesses, and for somebody who's not a business owner, that may seem complex. I run into that all the time. It's not complex if you run each business as a business. And that is the key when it all flows down to the individual tax return. Remember, the individual tax return, all that is us filing a financial statement to the IRS. That's all of the tax return is. It's a financial statement that consolidates all your income streams, credits, and deductions that they give you, all in one source. So the first 2 pages of your 1040, your personal tax return, are just a financial statement. The rest of the schedules, whether they're a letter or a number, are to support the documentation for those first 2 pages. That's it. Okay, so no different in your business. You have financial statements to figure out and see the well-being and health of your business, cash flow and loans and assets. The same is true for the IRS. Okay, so we are assets, we are revenue generators as taxpayers for the government. and the IRS collects those financial statements. All right. So I just wanted to clarify that. So I'm going to go ahead and share my screen. We're going to go through a couple articles. Some of the articles may be a little dated, but the reality is it's still pertinent and same information that's necessary for us. So the first one is updated for tax year 2022 by Intuit Tax TurboTax, December 1, 2022. So this was getting ready for tax season. And so what are the top 4 red flags that trigger an IRS audit? Now, this is based on Intuit TurboTax, what they would consider their insight. So the Internal Revenue Service, IRS, uses a combination of automated and human processes when selecting which tax returns to audit. All tax returns are compared with statistical norms, and those anomalies undergo 3 layers of review by personnel. Audits then occur either by mail or in meetings at taxpayers' places of business. Now, when they say taxpayers' places of business, what are they referring to? C corporations, okay? But most occur, you're going to be notified by mail. There's not going to be anyone who's going to just show up blindly and say, "Hi, I'm from the IRS. I want to look at your books." It's not efficient and effective for them to do that. For most people that are audited, and we'll look at the numbers, okay? If you're a large client or a large taxpayer and there's multiple issues that are going on, they're already going to go ahead and notify you, or they may go to the place of business because it's a large corporation and address the situation or to audit there. They can be unpleasant and sometimes unavoidable. Sure, an audit is an examination. That's how the IRS considers it. And if you remember back in school, when you had an exam, what'd you have to do? Study and prepare for it. The downside is that most people don't study and, more importantly, prepare for an audit. Most people wait till it occurs, if it occurs, and then they become reactive, and then it's a time suck. And that's why it's unpleasant. And at the end of the day, we don't like surprises. Certain red flags are sure to draw scrutiny and some easier to sidestep. Unreported income, for example. Others, such as high income, can't be helped. All right. So let's look at the first number one, according to TurboTax, is not reporting all your income. Duh. Don't need an article for that, do I? If you don't report income, it causes an issue. Why? Because most forms of income come in a 1099 or a W-2. The place of business has to file, if they paid you, they need to file a 1099 to the IRS that indicates that they paid you. You receive a 1099, so they're reporting. Now you got to report as well. And those two link up, okay? And so that's a no-brainer, right? I don't need to spend a lot of time on report all your income. All of it, period. All of it, done, okay? Now, the second one is breaking the rules on foreign accounts. Now, the reality is this doesn't affect probably 90% of taxpayers. Now, Bob, what about all those folks that are, foreign nationals, and then all those folks that come here and work and they're on visas and they file tax returns and then blah, 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 right? Sure. But the majority of them aren't breaking rules for foreign accounts. The majority of them are following this, but this is something that needs to be aware of. And here's the other reality. This is just the reality. This is fact. Many cultures tend to work with their own culture as taxpayers. So if I am from India, most time my CPA accountant is going to be from India as well. Now, sounds like a broad, oh my goodness, how dare you say that? That's the reality. I mean, it really is. It doesn't happen all the time, but that's the reality. People of a certain culture feel comfortable with this certain culture. There's nothing wrong with that. Nothing wrong with saying that. That's a stereotype. Well, there's a reason for stereotypes, is because birds of a feather flock together. That's the reality. And so my point of that is that if you're working with a tax professional or accountant that understands most of their clients come from the same home country they come from, most of them have businesses or real estate in those countries. So it makes a lot of sense as a servicing agent advisor to say, oh, by the way, we need to do X, Y, and Z because you have real estate in your home country. Nothing wrong with that. So this is really for those that are deciding to try to hide income and money. Now you got an issue, right? And that is not the majority of people, but that is definitely something that causes a trigger. Third, blurring the lines of business expenses. This is huge. The IRS, they don't look at excessive business tax deductions. They don't look at that. They look at what's reasonable, what's real. So the amounts of travel by a professional. So if, let's say in 2020, you had more travel business expenses in 2020 than you did in 2019. All right, we've got a question, right? Doesn't mean that you're lying, cheating, or deceiving. You really could have, because government shut down and world shut down and businesses shut down, and you're like, hey, I got to get, it's cheap to travel. Let me go expand my empire and let me go travel and let me go build my business. That's completely legitimate. Doesn't mean that they're not going to ask questions. They may ask questions just because that's a legitimate thing to ask. And if it's a legitimate business expenses, exactly how I described it, that's what you say. And by the way, here's all the clients I got from those travels that I didn't have in 2019. Pretty darn easy. That is very easy. Oh, okay, great. Thanks so much. Well, we're going to go ahead and close the case. All right. Now, am I oversimplifying it? No, not really. Not really. An examination is there's a question and there's an answer, and that answer has to be right. And how do you give a right answer? Well, treat as if you're in the court of law. I have to have proof. What is proof? Documentation. Just showing them, giving them more information to say, here's how I did this. And this is my proof. Okay, that's it. Pretty simple. Now, 4, earning more than 200,000. Well, I call BS on that. Earning more than 200,000, especially when the current administration is saying nobody under 400,000 is going to get audited. I call BS. But let's see what they're saying. Last year, the IRS audited about 1% of those earning less than 200,000. Almost 4% of those earning more, according to IRS data. Raised the threshold to $1 million, and a percentage of audited returns increased to 12.5. Now, why? Remember, they're auditing individual tax returns. So what happens is that, remember all those pass-throughs. What's that? S Corp, which is what most businesses are. And according to IRS data book, in 2021, there was about 5.7 million S Corps. Partnerships, other pass-through. There's about 4.8 million pass-throughs. And then you have LLCs, limited liability companies, that can choose to be taxed as an S Corp or a partnership or a single member LLC, which is on the Schedule C of the 1040. Okay. The 1040 is a big trigger. This is really referring to those that are filing a single member LLC, more than likely, or no entity on the Schedule C. I'm not saying all of these are from that. I'm just saying that's a good indication. So that's something to take a look at. Now, is this fear mongering? I don't think this is fear mongering. I don't think TurboTax is trying to create fear. Now, yeah, hey, we have you covered. Come use our stuff. Okay, great. But I don't think this is fear mongering at all. Now let's look at the top 9 IRS audit triggers by TaxShark. And let's see what they have to say. Having a major change in income or deduction compared to prior years. Well, it depends. If your income suddenly skyrockets or plummets by suspiciously large amounts compared to prior years, the IRS may be more likely to examine your records. I wouldn't say increases. I wouldn't say increases would cause that. I would say extreme decreases. But again, this is really if you're a single filer, W-2, and you're not really a business per se. Or your business, or maybe you're a single member LLC filing on the Schedule C. Then I would say maybe that's probably true. Maybe that's probably true. Okay. Now, suspicious around numbers, round numbers. This is true. So for example, as an S Corp, you're supposed to file what's called a reasonable compensation. You're supposed to take reasonable compensation. The way the IRS describes it is compensation that you would charge or pay somebody, I should say, pay somebody to do like in reasonable services. So, for example, if you're doing your own bookkeeping, what would you charge a bookkeeper? Okay, pay yourself that. That's reasonable comp. So one of the things we do in our planning is that we actually have an entire report and an interview process that we take our passers, not just S corps, but we do it with LLCs, C corps, any business owner that comes our way. We do a reasonable compensation report to see what is based on their duties and the tasks and the things that they do as a business owner that they could be paying somebody else to do, but they're not because they're doing it themselves. What's that report based on? Labor statistics, census data, county data. So there's this whole methodology that we do for clients. This is very, very important because what it does is it comes out with a round, not a round number, an odd number, because that's the reality. But if your CPA or your tax professional says, well, Jim, you should probably be paying yourself, $52,000 as a W-2. Done. Odd. Why? What methodology did you use? Because there's no methodology that's a legitimate methodology other than just pulling something out of thin air that would generate a round number as $52,000. Okay. So it needs to be now don't go 52,106. Right. That's so silly. If you're going to do something, then let's do it right. Right. Get a methodology, get a report. Why? Here's the interesting part. We'll talk about this when we talk about the tax compliance and NOLO, which is a website or a resource for attorneys or people studying in the law area. This is very important. To prepare for an examination, what do you need to do? Study, do your homework, get your notes together, right? So what you need to do is if your tax team, current tax team, bookkeeping team are not compiling information to support what their advice they're giving you, that's beyond the tax return, then they are failing you. Okay? They are failing you because the majority of tax professionals out there will not represent their clients in an audit. They just won't do it. We think as clients they will, but we have never asked the question, will you represent me? Because the ones that say yes typically charge a little bit more. A lot of times we do this as well. We will charge a little extra over a period of time so that if an audit does occur and it becomes a time suck for you and us, we have already been compensated for what work we have done for you. Okay. And so that just is what most will do. Okay. So this is good. So misreporting your taxable income, duh, just like the last one with the TurboTax. That's a duh. We don't need to go into that. We've made excessively large charitable gifts. It depends. Again, if they're cash donations, yes. Big issue. If they're checks, if they're through not just checks, but they're through certain structuring like a charitable annuity, that sort of stuff, then no, that's not a big deal. But typically cash, yes. Checks. Now, if you're going to a church, if you're going to churches and that kind of stuff, and that's not uncommon. Okay. But if it's a random non-charitable, or you have a bunch of random charities that you're giving money or cash to, that could raise a question. Okay. Doesn't mean it will, but it could, right? Now you are claiming a home office expense. No. This is one of the things that constantly taught you. Again, you have to have a methodology. Okay. Why are you doing this? What is the point? Now, if you don't have a separate room that's closed off as a door and a separate office room, then yes, this becomes questionable. Okay. Unless you have a methodology, right? So, okay, this is square footage of what I'm using of my desk and a file cabinet and the space of ADA spacing of my chair, right? This little square footage, 100 square feet, is what I'm using as my home office. And what is that to the percentage of your mortgage or rent? And then that's what you can take the deduction of that space, utilities, right? You have to use that percentage, but that's a methodology. Now, will you be audited? Will it raise a red flag? I don't think so. But if in a audit they start asking about it more, then yeah, of course, you have to have a methodology. Here's what I did. See, here's my space. This is the square footage. This is the percentage compared to my rent and my mortgage and the utilities and stuff that I use. So you're not deducting your entire rent or mortgage, all your utilities, right? You're not being deceptive, and that's what they're talking about. And again, this is mostly for those that are filing a Schedule C, self-employed, non-business entity owners. Okay, so this is a big issue. All right, you are using your personal car for business. No, this is not a big issue as long as you document. Okay, so even if you have a vehicle for business, you still need to document that you're using it for business. Okay, so no, not just personal. So I would recommend just charting your mileage, right? Charting your mileage. And don't be, this is not such a huge deduction that it causes you to end up creating a trigger, right? It causes you to cross a gray line, right? You need to make it black and white, that line, okay? You need to make it a solid, not a dotted line, right? So I have clients all the time, well, should I buy or lease, this or that, can I lease or buy a vehicle and write it off in my business for my spouse? Well, does your spouse, is she involved in your business? No, then no, you can't. That $500 a month deduction is not worth it. It's not worth it. I'm a doctor. Well, is your wife a doctor? No. Is she a nurse? Does she work in your practice or as a business manager? No. Don't do it. You don't need the deduction that bad. Don't be so desperate. You need to look at other legitimate, reasonable planning methods. And if that's your debate, is the personal vehicle, can I get a larger deduction off a personal vehicle? You need to change tax professionals. Quite honestly, you've outgrown them. Time to move on. Business and personal expenses commingling. Absolutely. You cannot have your business and your personal in one account. You have to have a separate business account. If you personally are taking money out of the business, it's considered a distribution. It's income, plain and simple. Now, if you personally are putting money into the business, that's considered cost basis. It's a loan. You should probably put a little promissory note together. It doesn't have to be something that's spectacular, but just documents that I, Bob Wolf, am going to lend my business, Terra Firma Business and Financial Consultants, $10,000 for the year of 2023 at a 2% interest. Done. Plain and simple. And you sign it as the lender and you sign it as the borrower for Terra Firma and as the personal. Remember, you're two separate entities. Your business entity and your person, individual, are two separate entities. So the business, as an authorizing signer and decision maker for the business, you need to sign for the business. And then, of course, you sign for yourself personally. Right? Sounds silly? It's like those shows or sitcoms where you say, well, hi, Bob, how you doing? Well, I'm good. How you doing? Right? It sounds silly, looks silly, feels silly. That's reality, though. It's just documenting, okay? You claim the first home buyer credit between 2020. We don't need to talk about this. We're so beyond this. If this is a trigger for now, then we're moving on. You have several years of missing tax returns. Duh. This was earth-shattering. You may be audited because we don't have tax returns, but we IRS are getting notifications that you're earning income. Duh. But anyway, so it's good information, right? So let's look at the U.S. Government Accountability Office, the GAO. They have talk about tax compliance. This is May 17, 2022. So this was a year ago, still relevant today. Trends of IRS audit rates and results for individual taxpayers by income. So this is good. So one of the things they talk about, so IRS audits individuals to verify. What did I say? IRS audits individuals. What did I say in the first with the tax? individuals. Okay. This is what the IRS does. You and I as business owners get scared because we think as a business, no, what you do in your business, you have bookkeeping, you have financial statements, you need to do good, legitimate bookkeeping, and it flows to your personal tax return. Don't overly take things on your personal tax return. All right, so let's look at this. IRS audit taxpayers with incomes below 25,000 and those with incomes of 500,000 or more are at higher rates. Now, why somebody less than 25? That doesn't sound fair. Well, because most of those folks need all 25,000. Okay. And so they may be taking, or more importantly, they may not even filing their taxes. So remember that last trigger on the tax shark. If you don't file tax, that could be a big reason. Okay, but we're not going to dive into that. You're watching this. You're not in that income. Okay, audit rates have dropped for all income levels. Sure, absolutely. Now they say due to staffing decreases because staff takes more time off. Well, some of it also has to do is that the government shut down and the IRS was backed up for about 3 years, right? They're still backed up. Though they say they're all caught up, nah, they're backed up. And that's okay. That makes sense. If you just stopped going to work, you stopped paying your bills, you stopped opening your mail, what would happen? It would back up, right? So the other thing is that things have gotten more complicated. The government makes law changes and tax changes, and the IRS is trying to catch up, and there's just it gets become more complicated. Fact, tax code is more complicated now. So the IRS has to address the complication. They got to train people on the complicatedness of the tax, plain and simple. So they're going to go, this is all going to be based on 2010 to 19. Audit rates and individual tax returns decreased, right? It talks about 0.9% to 0.25, even 1%. Let's just round this up to 1%. All right, 1% of taxpayers. All right, when you look at taxpayers, there's about 162 million taxpayers. Okay, 162 million taxpayers. What's 1% of that? Right? So 16 million. 16 million audits. How many IRS agents can audit 16 million returns from 1 year? See what I'm saying? It's just overly complicated. Go hire 80,000. 80,000. Okay, so we got 16 million divided by 80,000 IRS agents. That means each agent in 1 year has 200 cases, audit cases. No way. There's no way that could be done. No way that could be done. Okay. It just can't be. Now, there's a few other issues that have arisen. Okay, taxpayers claiming their earned income tax credit is higher than average. Okay, IRS officials explain that the tax credit audits require relatively few resources and individual taxpayers from receiving. So there's some things where they can tell IRS audits. This is a full report, by the way. This report is 46 pages. So you're welcome to go through this study, but the reality is that IRS estimates that individual taxpayers underreported their income on an average of by $245 billion each year for tax year 11 to 13. This underreporting is the largest component of the tax gap, the difference between the amount of taxes owed and taxes paid timely and voluntarily. Now, I will tell you that some of this underreporting is people not filing their taxes. Okay. Some of this is people just not filing their taxes. Some people that are self-employed or have side hustles and should be putting money on Schedule C but aren't. Some of this number is algorithm guesstimations by the IRS and the GAO. Okay. But the reality is that they are right that there are people not filing taxes. Okay. I've had a couple people over the years that say, hey, can you help us with our taxes or our financial planning? And say, sure. Yeah, we're going to need your last few filed tax returns and financial statements and blah, blah. Oh, I haven't filed tax returns. Okay. Well, how long you been in business? 6 years. And when was the last time you filed taxes before my business? Sorry, I can't help you. I can't help you, because not only will we have to charge you for 5-6 years of backed information, which you probably don't have documentation to prove that, you're going to owe taxes, penalties, and interest, okay, for that 6 years moving forward, each year for 6 years. Plus, you're not going to be able to afford us doing all that work for us to say you owe money in taxes, plus penalties, plus interest. It's not going to happen. So let's just stop this conversation right now. Right. And that's the case. And you just kind of block those people out of your mind. You take them out of your database. You don't talk to them and you move on. That's that. The IRS will catch up with them. Okay. Not my problem. That's their problem. I don't want anything. I want to help people, but that's just not reasonable. I can't do it. Don't need to talk about that anymore. So you have those types of people, and they're around. And then you have people who filed extension, they fired their CPA or fired their tax pro or their people, and then they moved and they just got overwhelmed with everything and they skipped a year. Okay. I get that. You're going to pay penalties and interest. There's some explanation there. Still shouldn't have happened. Still should have been a priority, but that's still, within constraints. We can still talk. We can still do stuff. We're not going to try to negotiate penalties and interest away from the IRS on your behalf. No, you made a mistake. That's on you, right? Own up to it, right? Pay the penalty, pay the fees, and just don't do it again. Right? Sucks that you were busy and all this kind of stuff, but that was your obligation, right? So there's some reasonableness in doing this planning and the processing of your taxes, which makes a lot of sense. Now, does that sound harsh on my end? No, it's not harsh at all, because if you actually own up to it, then it actually protects you more. Do you go into a separate statistical column? Maybe, but that's your problem. Take accountability for what decisions you made or didn't make, right? That's part of the problem of why we complain and bitch, so to speak, about what? About society. Until it comes to you. No, take accountability, okay? Now, what are the chances of being audited? Well, this is according to NOLO. Now, in 2019, returns were audited through 2022. Here's the statistics based on income. Okay, so I thought this was a good. So $1 to 25,000 of income, adjusted gross income, was at 0.4% audits. Okay, and most likely these were done through mail over a period of time. And I'm probably gonna guess that these are also not closed audits, that you have a difficult time getting a hold of these folks to get it done. Okay. Now, why does it go down from 25 to 50,000, 50,000 to 75,000, 75,000 to 100,000? Look at this. Not until you get between to a $500,000 and $1 million does that 0.4% get added again. Why is it so low between 25,000 to 500,000? Because you have responsible taxpayers. You have people who file their taxes, and they're being responsible, and there's a larger number and percentage of people in this area than the other areas of 500 to 1 million. There's many more taxpayers in the 100,000 to 200,000 range than the 500 to 1 million. So there may be more audits from a numbers perspective, but the percentage is lower. Okay. So that's why this may be a higher percentage, because there's less people in this category, less people in this category, right? So now these, I'm not going to say that this is accurate or true, but I'm going to make a statement that is just my assumption based on nothing but me pulling out of thin air. These are folks that could be overcomplicating things, could be trying to hide, could be paying zero taxes, and they're not in industries where it's heavily tax efficient. These are areas where you really should be paying a higher tax based on the industry you're in, but you're not. For example, just give you an example, a psychiatrist, right? They're psychiatrists, depending on where you're at in the country, you reasonably could be making $1 million to $2-3 million a year in income, depending on the size of your practice. And you really have no overhead. You have an office space that's rent, you have furniture, right? And your insurance, your E&O insurance. Other than that, you really don't have a lot of other expenses. You may have a receptionist, so you have that expense of $30,000 to $60,000, but you're in an income range but all of a sudden you're showing no income, right? No, I don't owe any taxes. Why? What's happening there? Right. So I'm not saying that psychiatrists do that. I'm just using that as an example of there's certain industries that make a certain type of money that the IRS knows that if they're not paying any taxes or their taxes are way lower than most, there's something questionable here. Okay. So let me put it this way, and we'll end this episode with this. Most people we work with that come to us aren't in any of these categories. They're hardworking business owners, just like you watching this video, hardworking business owners trying to make a living for their family, trying to take great care of their employees because they understand, hey, I can't take great care of my family unless I take great care of my employees and their families. It is a family. We all act like a family here, right? That type of mentality. And so you're talking about businesses that have 50 or less employees. They're very involved, they're very engaged, and they care. You care. So these numbers aren't you typically. Okay. Now, there are certain times and situations randomly you may get audited. Sure, absolutely. Okay. But if you're prepared for the examination, you have documentation for what example? Well, documentation such as you have corporate minutes that are beyond just financial statements. You document various activities you make decisions on as a business owner. So you remember when I was talking about earlier in this episode about, hey, a loan that you make personally to your business. And you have to have a promissory note that you sign as the authorizing agent for the business to sign, and you individually. So you have your signature twice. That's what I'm talking about. It's just documentation. It's proof. So when they're looking at your financial statements, your bank statement in an audit and say, what's this transaction? You say, oh, I did a temporary loan. Here's the promissory note for that temporary loan. Oh, okay, great. Boom, 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 boom. They're just going through to make sure that you know what you're doing and you're reporting things correctly. That's it. That's it. And if you have an answer and proof of everything done, that's what a true advisor, that's what a true tax team should be doing for you as a business owner. If that's not happening, then you need to start looking around. Okay. You need to start looking around. We know some folks that do things the right way, or do things the extra way, I should say, to support you. And so if that's of interest to you, let us know. Hey, if you liked any of this content, I know it started getting a little boring and dry. I know that. Talk about audits, right? That is what everybody wants to talk about at a party, right? That's the icebreaker. Hey, when was the last time you were audited? Yeah, right? Everyone flees. So I know this, but this is important information. And it's important information to be able to dissect what is really being said out there, to not create that fear, but logic in your mind. Let's just get prepared. So add any comments down below. If you didn't subscribe now, and feel free to share us. Okay. Just go into YouTube right where they have that crooked arrow, and just click on that and share that to other colleagues, partners of yours, other friends, family, that this you think this content or other content that we have provided makes sense for them. Text it to them, send it to them. Do us a favor, do you a favor. Thanks so much for watching. Thank you so much for believing in us. We believe in you. Make it a great day. Bye-bye.